Hello, guys. Welcome to the show this afternoon. Listen, I see a trend developing, and this is a very important trend. It's something that's reasonably new, and this is why I wanted to get the information out there. And it concerns Bitcoin and the cryptocurrencies, and also the market, what's happening. Uh, Unless the Fed relents and changes their quantitative tightening program, bond yields are going to continue to rise. This is a given. Uh, Now, I don't think the Fed is going to actually relent on their quantitative tightening program. They've got it up now to this point where it's $50 billion every single month. That's almost as much money as they were putting into the economy during quantitative easing. Now they're sucking it out. Not only that, they're raising interest rates. They are tightening. And to what they say, they have to keep this narrative going that this is an economic recovery and that everything is booming, when in fact they're fudging all the numbers. There has been no economic recovery. What we did was we had a stagnant economy for 10 years, and it's still stagnant. There's no real economic recovery right now, but they have to keep this narrative going of low unemployment and an economic recovery in order to keep up with their program, because if they stop their program now, if they do anything to try to stop quantitative tightening at this point, the dollar will die. Make no mistake about it. So they have to keep it going because this is what's supporting the dollar. This is the last bastion of support for the U.S. dollar. The petrodollar has been being undermined for years. China, and they're setting up alternatives to the SWIFT system. They're setting up alternatives. China has set up a system on oil futures contracts that are not denominated in U.S. dollars. I could go on with the list on and on. The things that are undermining the strength in the dollar. But the Fed is the last bastion of support for the dollar, and how they're doing this is by raising interest rates and also by quantitative tightening, which is basically they are cashing in their bonds when their bonds mature, $50 billion worth of bonds a month, and then they're taking that money and basically taking it out of the system. So they're withdrawing liquidity from the system. They have to do it or the dollar will die. And so here's the thing. If they continue with this process of withdrawing liquidity from the system, everything's going to start to tighten up and the stock market is going to turn over and it's going to go down. Because they're withdrawing the liquidity from the system that they have been supporting the stock market. Look, after the crisis of 2008, you can do a direct correlationship between the programs of quantitative easing 1, 2, 3, Operation Twist. Each time they went into a new program of quantitative easing, you'd see the stock market go up. That was the injection of money, liquidity. That's what brought the stock market up to the highs that we have now, was all of this money that was poured into the system. Now they're taking the money out. What's going to happen? Well, it's obvious the stock market's going to roll over and it's going to go down. At the same time, bond yields are rising. So we got this tremendous system. Now, how does this affect cryptocurrency? Well, here's the thing. Investors out there, including the general population that buys cryptocurrencies, are only buying cryptocurrencies because they see this erosion of the petrodollar. And if the dollar had have been maintained by people who were responsible and not a bunch of criminals, not a criminal cartel, but responsible people, they would have, first off, they would have kept the peg to gold. Your dollar would have still been redeemable in gold. And cryptocurrencies, they probably would have actually taken off and become popular, but it would have taken a lot longer. So they were invented in 2009. To get as popular as they are now, they would have taken until 2050. if we had responsible caretakers of the dollar. And because there's an old saying, necessity is the mother of invention. Most inventions are made in the world because they're needed. They serve a useful function. And if the dollar was serving its useful function properly and being well maintained, there'd be no need for cryptocurrency for a long time yet. The only utilitarian purpose for cryptocurrency would be because it's able to transfer fast across the internet. That's the only advantage you really have is its freedom of use over the internet. And that wouldn't take off. It would take a lot longer to take off. What's driving the cryptocurrencies is the mismanagement of the fiat money. That's what's driving it, big time driving it. And right now, we're in a period where the cryptocurrencies are still more or less a speculative investment. They haven't really taken on the role as money yet. I say yet. Now, here's the thing. When this crisis comes, it's definitely going to come in the stock markets, and it's going to spread from the stock markets to the bond markets and to all the money markets it's going to spread all through the entire system, the derivatives markets, everything, the banks, everything. When this spreads, right, where is cryptocurrency and what is it going to do? Because it's a speculative investment, this is the trend that I'm talking about right now. When I started this program, I'm going to explain the trend. Now, I had to lead you in now to understand where I'm going with this. And now I'm ready to get to the point of the matter. The point is, which way will the cryptocurrencies go when the stock market collapses? And I'll tell you, I see the trend that's developing. It has everything to do with sentiment toward the cryptocurrencies. Now, if you go back a few months ago, back to when cryptocurrency was on a roll, boys, it was on a roll. It went all the way up to $20,000. Sentiment was hot. Money was pouring in. People were very interested. Now that the prices fell back from $20,000 to roughly $6,300, everything's cooled really down. People are not near as interested as they once were. Now, there's still people, diehard people, who are really still interested, but that whole big crew that come when it was up to 20,000 of excitement, that's kind of faded now. It's faded back. Okay? When the stock market crash occurs, what's going to determine which way cryptocurrency goes, and I can see this trend developing, has everything to do with the sentiment involved, and the sentiment has everything to do with what the price is doing on cryptocurrencies. So it's all about timing. So when the stock market falls, if cryptocurrency is on its way up and rising in price at that same moment, sentiment will change because people are looking for yield, tremendously hunting, scouring for yield. They're going in the junk bonds and everything, trying to find yield. That's why they're chasing after these bonds right now. That's why the bonds keep dipping. They go up for a little bit, and then they dip again. Then they go up for a little bit because people are buying in. They're chasing yield. Well, cryptocurrency can be fantastic yield if it's on a roll. Okay? If it's going up, it's in a bull market. Right? Excitement. Investor excitement comes pouring in. And if the stock market and everything else is turning over, once that excitement gets going, it's like a ball rolling down a hill, like a snowball rolling down a hill, and I mean, it's gaining momentum. If it's in that cycle, when this stock market crash occurs, then it could really take off, the cryptocurrencies. But if it's still in a bearish trend and bearish sentiment is following it, and its tendency is to try to move downwards when the stock market crashes and the fear comes into the marketplace, then we could see a fall in the price of cryptocurrencies. So what's going to determine this whole thing It's all about timing for the cryptocurrencies. If they're doing good when the stock market crash comes, then we're going to see a rise in the price of cryptocurrencies. If they're doing bad when the stock market crash comes, then we could see a fall in the price of cryptocurrencies. Now, my tendency is to think that it's still going to be in a bear market when the crash comes. And it's very likely then that we're going to see some super buys, especially in the altcoins. And the one I got my eye on the most is Litecoin. I'm telling you, I'd love to get some Litecoins at 25 bucks a piece. Okay? Now, here's the thing. You guys that got cryptocurrencies right now or are planning on buying a bit more, whatever you do, you got to wait out this stock market crash and wait out until the Fed changes their monetary policy. You got to wait. Do not let it all go. Do not sell all your cryptocurrencies if they do crash in price. Don't sell them all. Then you're going to incur your loss. You're going to take your loss. Later, you'll be kicking yourself so bad because later, after the Fed changes their monetary policy and they quit all this tightening business, which is stupidity from the very get-go. It's plain stupidity. This tightening that they're doing, this tightening process. I mean, what the heck are they thinking? I know what they're doing, though. They're trying to support the dollar. They're actually extending this whole thing. They're pushing it into the future by supporting the dollar. They're carrying this thing as far as they can possibly carry before they finally drop the ball. That's what they're doing. But believe me, they're gonna end up dropping the ball in the end when the markets crash. That's it. That's over. It's over with this tightening business. It's not going to be proven that they can't do the tightening until the day comes when it's proven that they can't do it anymore and they have to reverse policy. As soon as they do that, this is going to be rocket fuel to cryptocurrencies and gold and silver. Until that day comes, us guys that like to get a bit of silver and like to buy and dabble in cryptocurrencies, we're going to be watching our portfolios. It's just sick. It's sick. It makes you feel sick to your stomach. You've invested money in it, and you're watching it lose bit by bit, being chewed away. And while the dollar is almighty, and thank the Fed for that, but the day is coming. Trust me, guys, the day is coming when all of this is going to reverse direction. And that's always the way it is. If you're going to make out good and you're going to make out like a bandit, you've got to be patient. You've got to be patient. So that's what I see coming with the cryptocurrencies. I see that if the sentiment is good and they're on the rise when the market goes down, we're going to see them continue to move upwards. But if the sentiment is bad and if they are still in a bear market and they're trending downwards when the market crash comes, the market crash could accelerate that fall downwards. That's what I see in this. Thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye-bye.